Okay, so hello guys, I'm back on the analysis for the DXY and today again we're looking at the dollar index. So now it looks like a market maker sell model. Now, in the previous ICT live, I just saw that this is gonna be a market maker sell model. And in the market maker sell model, first of all, let's start with the weekly time frame so that we will have a wide range of variety what is going to happen next in the price. Okay, so mean threshold order block has been respecting. Now we are spreading out to the downside. Remember last down candle, this is also an order block. Potentially it will not form reaction, but it will show a rejection or some kind of support. So sell side liquidity resting here. And now let's go to the daily time frame. Okay, so what I want you guys to see is look at this down candle here. It rallied, came down, mitigation here. Now look at the down candle here. The down candle which we use they for buying. Now they are mitigating their orders. Listen to me, folks. This is gonna be helpful for you guys and for my understanding also. The last down candle which they used for buying. Now they are coming back and re-mitigating their orders at the same level. This has already been done, and now the next time for that is this one. After that, this one. So, down candle, now it will act as a what we say an order block, kind of like that. So, you will see some kind of pause in here because they need time to mitigate their orders. So, we trade through this one. Now we will come up to mitigate the orders. Either it can be the low, it can be the mean threshold. Well, it can be the failure gap also. So let's rotate this one. Okay, it's already been in my chart. So um, listen, this failure gap was straight through, so we can come up mitigate that. If don't, then this will be the possible next round liquidity. So now we know that we are likely to expand for a very short term upside. Now, if we know that our likely strong liquidity is buy side, we're looking for buy orders. Yesterday, how beautifully we came down in the premium end of this favorable gap or volume balance, you can say, and now rejecting. Now, there is also a favorable gap here. Now let's go to the lower time frames. In the lower time frames, we can see that this is a mitigation block, and this is a fair value gap, and this just surrounds around the consequent encroachment of this fair value gap. Actually not. Consequent encroachment is used for the wicks and the gaps, but you can say that from this low to that high, we are around this consequent encroachment price can reach. But ultimately, I'm looking at this down candle, ultimately this small wick in here. Let me show you that in the lower time frame, like 1 hour. Yesterday was a large range day, so today we can expect a consolidation here. Although it's Friday, so I'm expecting a TGIF. Okay, so this low has taken out this short-term high, so ultimately it's a breaker also. And I will look the price to from here to ultimately reach at this low. And if it's so, let's have a look and compare the Euro USD with the okay, wait, yeah, okay. So what's happening in here is a fall, same here, go up, then fall. So it looks same. Yesterday I missed this order block trade or rally, but I captured some of them in the gold. Um, to be not lie, yesterday I was expecting a down movement, but as soon as I saw the fair value gap, um, I changed my mind, and that's how it's work. You should do what's market trying to show you, not what are you are expecting in the price. Okay, now um, you know that we are likely to trade upside. At least I'm expecting that. So this is down candle here, and looks like we're supporting it. Let's go to the lower time frames. What's the time here? Okay, so it's 1:30, and I will only look for a trade around the silver bullet time, so that I will have a higher confidence in the uh, higher chances to go right rather than wrong. Because yesterday was a large entry, so it's not a good scenario to take early trades in the morning. And now, finally, the 5 minute time frame. Okay, relative equal lows. Hmm. We can come down, sleep then we can rally, or we can just left that relative equal lows intact, rally for the upside, and then ultimately come and take out this. So it's kind of engineering of liquidity also, but ultimately we will see what happens in the price. But they, I'll be expecting a bullish retracement. Okay, now coming to the EURUSD. Before I get into this, um, what do you guys see here? I mean, we can see that we are going bullish. So, oops, it is. Oops, I switched the page. Okay, okay, this is EURUSD. So we'll start with that week. Slowly we'll get down to the lower time. Down candle means a short order block rally at a equal highs. Not a relative one, but this two. I'm talking about this two. This relative equal highs, not this one. That's gonna be the next round. It looks like so. Now let's go on to the lower time frame, like not lower time frame, the major one, that is the daily. The majority of the time you should be spending that is really on the daily. I think so because daily is more so clear. Okay, so what? So in the dollar index, market maker sell model. So what we gonna do here? Market maker buy model. Last up candle for the down move order block. Now they will reprice that order block in the same level. Had they done so? Here, here, they done so. Now what? Up candle. This will now what will it become? It will become another block. So take it like a perspective like this one. What I'm trying to tell you. Okay. If the scenario is like this one, oh okay. If the scenario is like that one. So what we need to do is suppose we can draw a line here and a line here. Okay, we can draw a line here. Same in this one, the high line and the low. Think of it, wait for a second and try to identify what is going on here. Listen guys, this up candle before the down move, we know it's not a block, but now this up candle will act as an bullish order block. Price will go up when it was violated here in this candle. Let me show you with this naked chart. I'll not include this one because that will be, but you can say non candle validated order block. Yeah, but it's more clear. Also, the most explosive movement occurred in the second leg of the price. Okay, the down candle, when it was the high of the candle was validated in this candle. It came down and disrespected the low of the order block. No, it respected the upper end of the fair value gap. I mean, the upper end of the order block and started rallying. See this low? Where it is? Yeah, this one. Opening of this one, rally. What's gonna be in this one? This is violated. Now what? The high, this line, market will come down at this level or the mean threshold, not below the mean threshold. I mean, VIX can do. I mean, really, if it's really good, VIX can do the damage, but what it should not close below the mean threshold of this candle. So if the scenario is like that, so what we will do? We will just remove all the lines here. So this is a naked chart. I will simply draw a line, here to here. Let me change the color. That's like this one. So we know that price can reach here. So the price is order block. And then we'll look to take out the size. But as when the market maker buy models happens, the best scenario, the first buy lock this occur in the second leg of the price. This is the first leg, and this is the second leg. Now this is going to be a third leg. This is gonna be a very explosive, the second one, always. And to be frank, I don't think this fair value gap is going to be formed. This is gonna be a breakaway gap. I mean, it will not be filled completely. So I'm waiting for the price to reach here. And today's TGIF, so Monday, Tuesday, Wednesday, Thursday, and today's Friday. It's likely to trace 20 to 30% of the week. So this is gonna be the most nearby target for us. I will try to enter in the silver bullet time. Okay, now remember what I had told you. Okay, this fair value gap is just going to form. If it's good, it should form a breakaway gap. Now coming into the lower time frames, look how down candles are respecting. Actually, to be truth, this market maker buy model in the Euro USD, I didn't notice that. Really, I didn't notice that. Yesterday in the ICT stream, when he mentioned this, then my mind got open and I said, "What the fuck is that? How silly I am! How obvious is this? Why didn't I notice it?" But there's nothing to be said that I'm stupid or like that because this is the part of the game. So it's good that I missed and able to get a chance to learn. So next time I will be um, remembering what I did lastly, and I'll try to be better. Overall, I'm proud of myself, so I did well, and that's how it's going, and I'm really working on it. So this is the downside level, and the upside is this resistance liquid signatures ultimately this way. So now the 4 hour, nothing shows here. 1 hour, just a second, it might be a network issue. Okay, now here what we can see is l- look at this one. Okay, also there is a gap. Listen to me. I can see this gap here, but I don't want to see. Let me. Okay, what I'm telling you. Although it is a gap, but I don't see this gap to be filled in. If it does so, it's not good. What's here? Price straight up, came down, then again redelivered, rebalance. What does it mean? It clearly means that it's it's not gonna go below this one because this whole area is already been balanced here, so price doesn't need to came below this low. If it does so, I'll have to wait for the more information. What could be the next scenario? But if price comes up, this is the line I'm expecting, and if it's gonna wick through also, the wick should also not violate this low. Even the damage of the wicks should not violate this low because this area has already been balanced. Price can reach the mean what's that? Not mean threshold. It's mean the consequent encroachment of this wick, and that's it. Not below that. And ultimately, if price comes here, then we'll look to target the high end 15-minute time frame. And yeah, I was talking about this one. I captured a move here. I mean, when it swept the high, this one, then I thought it can come down. And I was looking to further more information either it's gonna take out this low or not. So I take a partial here and I entered here. It was around at this candle I entered. Yeah, around this candle I entered. And it was a fair value gap, so I thought it's just gonna expand. But news came and just rallied. So a lesson learned that uh, whenever you have profits in your hand, try to take something out of the market. If it's the time of the news and you're in profit, you should really take at least 50% of your profit out. I took 30%, but later on I thought I should have exited 50%, but it's worked backwards, so I cannot do that, and I cannot regret because that's not good. But what I can do next time is I'll try to I'll just try to exit the trades if it's time for the news. And if I'm having confusion in the mind which side it's gonna go, or even if I know the direction of the market, then also I should be at least exiting 50% of the profit and rest let the break even go. Now, really, that was a pretty impressive and explosive moment yesterday. Why? You know why that was? Because the major reason is it was a market maker buy model. The more specific reason is it was the second leg of the market maker buy. This is something inside information by the IC. Now candles, order block, rally. 5 minute time frame finally. This line represents the downside objective. Just kind of consolidation. It's not good to enter early in the morning after the FOMC. So we'll wait for the perfect, not the perfect. We wait for the ideal time, um, which will give us high probability setup, not sure setups or not completely safe setups, but it will be high probability setups. So let's wait for the market to do something and give us some kind of thing. Okay, so now um, what we can see here, anything can happen. We'll look for the time. enter here. Now GBPUSD, and this is GBPUSD gonna be the short because we have already discussed a lot. I read this price wrong. I was expecting really variation because this all the lows were more. I mean, they were so clear. But where did price go for? Look at this gap. Price goes for this gap. Now, still we are having some area left in the gap. So we'll see if price will fill that. At least it will doesn't need to, but I think it's gonna fill this CB. Okay, now look at the down because they're supporting the bullish move. So here also same. Every down candle is supporting the price means showing the willingness to go higher. 1 hour time frame. Yesterday scenario, price came down here. I was expecting market to take out this low and ultimately reach here. Really, man, really, I was expecting that. Look at this one. I was expecting price to reach here, then rally. Then did so. And in this one, I had taken small trade. I was expecting a bearish run, so I get I took a trade somewhere here and got stopped out. Not got stopped out. I just exited the trade because it wasn't looking good for me. Because whenever dollar is in, I was expecting a bullish run in the dollar. So if it's so, then it's gonna do. It's gonna. Okay. So I was expecting a bearish run, not bearish run. I was expecting a bullish run in the dollar. So I thought GPS is gonna fall, but it didn't give me any kind of. I mean, look at the 5 minute time frame. It didn't give me something to support the price, but I want to show you something. When price did this move, I really thought now it's going to go down. I really thought that, but what I noticed, if you are having a longer and a higher time frame bias in your side, I mean, if you're wrong in the side of the market, nothing's gonna stop. Nothing could stop you. Nothing can stop the market from hitting your stop loss if you are in the wrong side. If you are in the right side of the market, every PDA you'll be looking to trade maximum number of PDAs will gonna support the price. And what I noticed, suppose you are bullish in here, the initial PDA, I mean, suppose we are running from here, okay? We are running from here. Where's the initial PDA? If we take out this higher, then This is the breaker, and below that one, this is the order block. Look, order block is supporting the price. This is a what to say, a breaker, a candle down move. This is also supporting price inside this fair value gap. So as long as you are bullish or bearish, the previous and the most initial PTR should respect the price. And if it does so, it shows willingness to really expand the side which you are favoring. So this was actually wait. I didn't enter there. Yeah, I entered here. Okay, I had told you that. Okay, and ultimately price rallied, rallied a lot. And okay, guys, that's it for today, and we'll talk to another time. And see you guys there.